The world's biggest cruise line is falling 12%. A House committee has opened an investigation into Carnival's handling of the COVID-19 outbreaks that resulted in more than 1,500 cases aboard ships, as well as dozens of passenger and crew deaths. And U.S. manufacturing is in distress. The Institute for Supply Management reports factory output posted the largest decline since the 1940s as the coronavirus outbreak paralyzed the economy. Donna Wilson, Bloomberg Radio.
Hope you enjoyed your meal. And I just want to say, he's lucky to have a brother like you.
Lucky? Caring for my brother is far from easy. But he's a part of me, like my arms and legs, so I'll be his. No time for tired. Nothing can disable this love. He needs me, but I'm the lucky one, even though I need help now and then.
If you're caring for a loved one, visit aarp.org/caregiving for care guides and community support for your strength. Brought to you by AARP and the Ad Council.
The world's financial decision makers connect on the Bloomberg Terminal. The buy side and the sell side together, collaborating across markets and countries in real time, sharing ideas, negotiating trades, and forming an influential network of over 325,000 financial professionals that helps power global markets. Isn't it time you join them? Request a demo at bloomberg.com/professional.
Are you interested in a challenging...
Switch on Acorn TV, the brand new streaming service featuring world-class TV from Britain and beyond. Watch exclusive premieres like the colourful crime drama Queens of Mystery.
Once you have eliminated the impossible,
whatever remains, however improbable,
must be the truth.
And fan favourites like Inspector George Gently.
I'm just an old copper doing his job.
If you love drama with a little mystery thrown in, enjoy 30 days free with code ACORN30. Then just $4.99 a month. No adverts, no contract, cancel anytime. Join online today at acorn.tv.
Coming soon, Ricochet, the new action film written by, directed and starring Euro Millions winner Timothy Barker, with music by Timothy Barker.
Tonight's Euro Millions jackpot is a massive £35 million. That's dream come true money. Euro Millions from the National Lottery. Your numbers make amazing happen. Play online or on the app. Estimated jackpot. Rules and procedures apply. Players must be 16 or over.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
The garden tools that mean you can grow your own. The fire pit that turns tea time into an alfresco dining experience. The paddling pool that turns your back garden into a water park. With a choice of ways to pay, you can make the most of family time. You can say yes when it matters most at very.co.uk. Goods and services provided by Shop Direct Home Shopping Limited. Credit provided. Subject to status by Shop Direct Finance Company Limited. 18+.
Picture in your mind a stylish Audi with striking LED headlights, sporty alloy wheels, and some of our most advanced features, including a 10-inch digital cockpit and smart assistant systems like lane departure warning. Picture what that Audi looks like. Now think smaller. The Audi A1. It's not a small car, it's a small Audi. Visit audi.co.uk. Audi. Vorsprung durch Technik.
Where will 2020 take you? Somewhere where people care. About each other. About our planet. About creating a better world for everyone. And becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Typical Danny. Imagine trying to unwind at a spa weekend and you wind up getting your mud pack all over your fave personalised dressing gown. But no worries. Just one wash and my clothes will smell perf with Surf.
Surf gives you long-lasting fragrance with natural essential oils. Find your fragrance in Surf's laundry range.
Max is dreaming of riding a giant chameleon whilst fighting a clan of ninjas. But in reality, he's helping fight COVID-19 in his sleep. Like thousands of others, he's joined the Dream Team. By using the Dream Lab app, they're helping scientists speed up the search for potential treatments.
I'll fight you.
You go, Max. Search Vodafone Dream Lab and join the Dream Team tonight.
Dreamlab app is owned by Vodafone Foundation, an independent charity. Registration number 1089625. Full terms at vodafone.co.uk/dreamlab.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Balance of Power with David Weston.
Coming up on Balance of Power, workplace safety is more important than ever in the time of the coronavirus. Former Hewlett-Packard CEO Carly Fiorina is here to tell us about the new world of the workplace. But first, let's get a market check with Charlie Pella.
Hi, thank you very much. Here's what's going on. David Weston at or near lows of the day. For the Dow, for the S&P, and NASDAQ, here's where we stand. S&P slumping 85 points. That's a drop right now of 3%. We've got the Dow down 602, a drop there of 2.5%. And NASDAQ is down 309, a drop now of 3.5%. In the year-to-date column, S&P is down on this first trading day of May. It is down so far this year by 12.5%. 10-year up 230 seconds with a yield of 0.63%. Gold up 0.5 now at $16.95 the ounce. Crude rallying again today. West Texas Intermediate up 3.5%, now at $19.51 a barrel. American factory output, speaking of the workplace, posted its steepest decline since the 1940s. And with that story, here's Bloomberg's Vinny Del Giudice.
The pandemic has halted conveyor belts and assembly lines nationwide. The Institute for Supply Management Index plummeted more than 20 points in April, the largest pullback in data back to 1948. Factory employment also hit a 7-decade low. The outlook is in doubt. Take the auto industry. It faces competition from falling used car prices as dealers and rental firms trim fleets. Vinny Del Giudice, Bloomberg Radio.
Lots of high-profile earnings, and those companies are all lower. Apple down now by 1.3%. Amazon tumbling 7.6%. ExxonMobil reporting this morning down 5.4%. Chevron lower now by 2%. Again, recapping the Dow, the S&P, NASDAQ, all declining, with the S&P down 83, a drop of 2.9%. I'm Charlie Pellet. That, David Weston. Happy Friday, by the way, is a Bloomberg Business Flash.
Happy Friday to you as well, Charlie. Thank you so much. We're waiting right now for Charlie Baker, another Charlie, the governor of Massachusetts, to give a news conference, which we will go to when it begins. But in the meantime, we do want to talk about workplaces. Shutting them down was one thing. With many workers, let's be frank, were eager to leave because they were afraid that the coronavirus might be there in the workplace. Opening them back up may be more tricky as CEOs take action to protect their workers and also monitor them. And workers look for assurances that it's safe to come back. We welcome back now Carly Fiorina, founder and chairman of Carly Fiorina Enterprises and Unlocking Potential. Ms. Fiorina, of course, was the CEO of Hewlett-Packard. So, Carly, welcome back. Great to have you here. There's a piece, I don't know if you saw it, in the FT just today saying it's the end of the office as we know it. And it quotes in part Jess Staley from Barclays saying, we're not going to have 6,000, 7,000 people in a big office building anymore. Do you think that's right or overblown?
No, I think that's right. And actually, David, thanks. It's great to be back with you. I think we talked about this a couple of weeks ago. Look, whether it's Amazon's earnings today or the discussions that are going on around the meatpacking industry, the necessity of that industry versus the fears, the very understandable fears of workers, worker safety is going to be a huge issue. And it's going to cost money to deal with worker safety. I also think consumers are going to be very mindful of their safety as well as the safety of workers. And so we saw Amazon posting record revenues, but we also saw them having to spend a lot more money to keep their workers safe. And I think the workplace tension in Amazon warehouses is frankly going to continue.
Well, we're so glad you brought that up because in the reporting about Amazon, because as you say, they made a lot more revenue, but they essentially spent it all, including on hazard pay and special arrangements for workers. At the same time, they have apparently a challenge because at the beginning they said anybody who wants to stay home can stay home. It's okay, no questions asked. They're trying to come off of that now and say there's got to be a reason why you stay home. You can't do it just because you want to stay home. How does an employer manage that? Because you want to be solicitous of the workers. You want to respect their sense of safety. At the same time, you need them to come back to work, a lot of them.
That's right. That's exactly right. And I think that is why employers are going to have to take on the responsibility of keeping their workers safe and reassuring their workers that the workplace is safe. And that's why I think the commentary from the Barclays executive is correct. WeWork's saying today or the other day that they would expect record drops in revenues. That's because people aren't going to pack buildings in the same way. People are going to rethink real estate. People are going to rethink an assembly line. People are going to rethink grocery stocking. People are going to rethink Target workers. I mean, all of these stories are coming out, and I think it's very, very predictable that workers would be concerned. And employers, in order to be able to say to them, you must come back, must also be able to say, you will be safe.
Yeah, exactly. And also, what are we going to do for you if, in fact, some people do get the virus? Because it's not going to be just a matter of making sure everybody's safe, but also some people will get it. Let's be honest, in all likelihood, until we have a vaccine, somebody's going to get it. How do you track them? How do you make sure you know who has it, who doesn't have it, whom they've come in contact with, and really isolate them? Let's be frank.
Yes, I agree. And, we see all these models now that are talking about another wave or another several waves of this disease, and maybe we have to deal with this for 18 to 24 more months. I do think that employers will begin to think about taking on more responsibility for example, temperature checks, hygiene stations. You and I, David, have talked about telemedicine before. I think telemedicine is here to stay. I think there are many, many positives in that. But for example, you can imagine employers thinking, I need to make sure that both I and my employees have access to healthcare advice on a relatively regular basis. So I do think this is a rethink of the workplace, and I think it is predictable to say that there will be more expenses associated with that.
Yeah, and it's going to be a lot of pressure on CEOs and their senior management team. And maybe we'll be sorting some out from the others about who do this particularly well and who don't. And we've already had a situation which is different. It's taking some of the loans that were extended, where some CEOs have come under some criticism for taking loans where it's not thought it was entirely intended for them, even if they qualified for it. But I just wonder whether the social and ESG is going to be much more important for the executive to manage too.
Oh, I think there's no question about that. David, I have said publicly since the year 2000 that a CEO's responsibility is to balance the requirements of employees, customers, communities, and investors. And that wasn't always a popular view. You will recall that the Business Roundtable just put out a statement several months ago, pre-COVID-19, basically saying that. And I think now CEOs are going to be held to that standard. Are you actually balancing the requirements of your employees and your communities and your customers in addition to your investors? I do think there will be a higher bar, and I actually don't think that's a bad thing, because I think it can be a competitive advantage over time. I think employees will look for that, but I also think over time customers and investors are going to look for that as well.
Well, that's what I was going to ask about, actually, is exactly the investors. As we're trying to pick ourselves back up off the floor here, we hope not too far distant future, there will be people who do better and people who do worse. There will be companies that do better and companies that do worse. As you're worried about your stock price, do you believe that finally we will have, particularly the institutional investors, start to discriminate based on that ESG and particularly the social part of different companies?
Well, I certainly hope so. And I certainly think it's time. And I think the economic rationale for that is obvious if we lengthen our view just a little. I mean, let's face it. We've had good times in the market for a long time. And what does that cause? It causes people to shorten their view and get all excited about tomorrow's returns or next week's returns or next quarter's returns. But if you lengthen your view a little bit and think through sustainable shareholder value, then what COVID-19 has reminded us of is we actually are all connected, there are health concerns that we need to be concerned about. This will not be the last pandemic. Environmental issues do have a long-term impact, as does employee health and well-being.
Does this make the investor relations position much more important than it has been before?
Well, I think it becomes incumbent on investor relations, CFOs, CEOs, to explain to their investors why making certain investments is going to pay off in the long run. And let's face it, investors are always impatient, and they're particularly impatient in a good stock market. They're impatient in a bull market in particular. Maybe now, in a market where, frankly, there isn't anywhere else to put your money except in equities right now, given where interest rates are. But maybe this is a time where investors will be willing to hear a story about, look, we're making investments now. They will pay off later, but they're not going to pay off next quarter. And we're going to make some investments, for example, in safeguarding employee health that we may not see the payoff for a couple of years, but the payoff will be there. I think that story is incumbent upon investor relations and CEOs to tell, the short term, the medium term, and the long term. And I do think we need to lengthen our view in general. I think that's been true for a very long time.
It's a really good point that when things are good, you can afford to be short-term, but you can't when it gets to be really, really bad. At the same time, with all your experience in American business and politics for that matter as well, is this distributed evenly across companies, across sectors, across geographies? That is to say, are there some parts of the economy, some companies, who are more prone to pay attention to stakeholders, as you say, the full stakeholders, customers, and employees and investors than others?
Well, yes. First, let me just say, one of my concerns about the response, the economic response, the fiscal and monetary response to this pandemic is I fear that we are concentrating both economic power and political power.
Carly, can you just hold that thought for a moment, because we're going to go to Charlie Baker, Governor of Massachusetts. We have a lot more to talk to you about, but in the meantime, let's go up to Massachusetts.
COVID-19, that's about a 19% positive test rate, which is consistent with the rate we've seen the past few days and significantly below where it was when we got started. We continue to hold daily calls with our healthcare leaders to closely monitor hospital capacity and hospitalization rates statewide. As of yesterday, 3,803 patients, which was again about 6% of all cases, were hospitalized due to COVID-19. This is the third day in a row that COVID-19 related hospitalizations have slightly decreased. While there are still thousands of people in need of hospital-level care, this number has not gone up, which is a very good sign for a couple of weeks. And I would just say something I constantly say here, which is it's important for people to remember that a big part of why we put so much work, and you put so much work, into distancing, staying at home, only going out if you actually needed to, was to slow the spread. And it's also why we put so much work into working with our colleagues in the healthcare and hospital community to make sure that we would have the capacity when the surge got here to not just take care of the people who got ill because of COVID-19 during the surge, but that the hospital community and the healthcare system generally would be able to take care of everybody else too. And I'm pleased to say that we have heard from several of our colleagues in the hospital community that people have been coming into the ED, people have been sort of reacquainting themselves in some cases with the healthcare system, and we think that continues to be critically important. And I also want to say that we do know that there have been hundreds of thousands of telehealth visits that have taken place between clinicians and patients since we put that emergency order in place some 6 weeks ago. And that's turned out to be a very effective way for people to engage with their clinicians on a pretty regular basis without necessarily having to put either one in a face-to-face situation. Obviously, each part of Massachusetts is at a slightly different stage with respect to the pandemic. So when we see a statewide drop in patients who are being hospitalized for COVID-19, there are hospitals that have significantly fewer patients and that there are some that have significantly more. But overall, this is a very good sign. Frontline medical workers in many cases have been and continue to work around the clock. And because everybody's been playing their role and doing their part, they have the capacity and the ability to deal with the sickest patients who are dealing with COVID. And we continue to chase down every avenue that's available to us with respect to PPE to ensure the safety of our emergency responders, our frontline healthcare workers, and many of our vulnerable residents. And as of yesterday, we've delivered over 7.3 million pieces of personalized protective equipment, including masks, gowns, gloves, and ventilators. This gear is coming from a variety of places and going to a variety of places, but primarily hospitals, senior facilities, and first responders. As infectious disease specialists continue to learn more about COVID-19, it's clear that this virus is highly contagious and can be spread from person to person without symptoms. And what I mean by that is a significant portion of the people who actually carry the COVID-19 virus never show any symptoms at all, but they are in fact contagious. That means it's possible for a person to infect other close contacts with COVID-19 without knowing that they are infected themselves. We'll continue to do everything we can to expand testing to detect high infection rates, hotspots, and particular communities where we believe we need to be doing more testing. And we continue to arm our facilities with the supplies that they need to test larger and larger populations. And as we've said many times, while we work with the healthcare community to push back on the virus, everyone else has a role to play that's equally important. And as part of that effort, we've already advised that everyone should use face masks or face coverings in public spaces when they are unable to practice social distancing. As we continue to think about the future and a return to a new normal, covering our faces when we cannot practice social distancing is an easy, critically important, and essential step that everyone can and should take to stop or slow the spread. Earlier today, I signed an executive order requiring residents to use a face covering in public places when they cannot socially distance from others. This order does not apply to children under the age of 2 or to people who are unable to wear a face mask or a face covering due to medical conditions or other DPH-issued exemptions. I've also directed the Department of Public Health to issue additional guidance regarding children between the ages of 2 and 5 years old for parents and for guardians. This requirement applies to all workers and customers of businesses and other organizations that are open to the public. The public's required to wear a face covering at all times in grocery stores, retail stores, or on public transportation. The order goes into effect on May 6th. There are several ways you can make your own face covering using items in your wardrobe. It could be made from a bandana, a t-shirt, or other breathable fabrics. Disposable masks are also an option. We strongly discourage residents from using medical-grade masks, and those should be prioritized for healthcare workers and first responders. We've made many requests over the course of the past 6 weeks of this great state, including staying at home, avoiding gatherings, and socially distancing. Our mobility data shows that people have cooperated in many ways to a greater extent than people in practically any other state, if you believe some of the reports that are out there. And it's making a big difference as we fight this highly contagious disease. This order builds on that same idea that everyone doing a small thing all the time can go a long way to improving everyone else's ability to avoid the virus. When folks are out in public places where they cannot social distance, like in stores and on public transportation, everyone needs to wear a face covering for your own protection. Several businesses have already issued similar policies, and so have several municipalities. We view this as common sense and an important way on a statewide basis to establish for the long term a set of standards for what we would call the new normal. I also want to provide a quick update on the expansion of our community health center testing across the Commonwealth. On April 22nd, we announced a partnership with Quest Diagnostics and the Mass League of Community Health Centers to increase testing initially at 12 community health centers. This number will grow. These facilities are deeply rooted in their communities and are committed to facilitating access to care and eliminating health disparities.
Okay, we have been listening to Governor Charlie Baker of the Commonwealth of Massachusetts at his news conference. He talked to us about how important it was to maintain the hospital community, not just for COVID patients, but also in general. He talked about hundreds of thousands of telehealth visits, a lot of telemedicine going on in the Commonwealth of Massachusetts. Talked about private protective and equipment, and they've delivered more than 7.3 million pieces so far. And he also talked about the new executive order requiring use of face masks when you're out and cannot socially distance. So that is Charlie Baker, the governor of the Commonwealth of Massachusetts. And now we want to return to Carly Fiorina, the chairman of Carly Fiorina Enterprises on Unlikely Potential, because we interrupted her rather rudely because we wanted to go to that news conference. And Carly, I want to pick up exactly where, as I recall, you were, which is you were saying you have some concerns about the economic response thus far to this crisis.
Yes, we've had this conversation before, David, and I've been public elsewhere in saying that I think, relatively speaking, we've given too much money to the big companies and not enough money to the small companies. But when you have the federal government issuing literally trillions of dollars in support, as opposed to, for example, block granting money into states, what's happening is you're concentrating not just political power, but economic power. I mean, we know the data is clear. The federal government, money distributed through the federal government tends to favor the big over the small, the wealthy over the less fortunate, the connected over the less or disconnected. And I think that's what we're seeing. And so, yes, certain companies have been shamed into giving the money back, but there's no question that fundamentally the organizations that have been favored through all of this help have been larger and more connected. There's also no question that the wealthy have gotten tax breaks, which I find just unbelievable, actually. But not unbelievable. It's unconscionable. It's clearly believable. So I would hope, clearly more money is going to be spent here. And I would really urge politicians of both parties to consider making block grants to states, because governors are closer to the ground. They are able to make priority calls that are more accountable, honestly, because their constituents can get to them more easily than they can to the federal government. But we've got to help out, really help out, the smallest businesses, not to mention working families and those individuals who are less fortunate. It is the little businesses that have been a job creation engine in this country, but it's also the smaller businesses that give our communities character and personality. And if only the large chains and the largest enterprises survive this, I think we won't recognize the new normal. And I think we begin to impact our innovative and entrepreneurial capacity as well.
Carly, reinforce what you're saying, really. We have this so-called Main Street lending program that the Fed, it's not just the Treasury now, but the Fed now is loaning money to companies. And yesterday they changed the criteria to go up to companies with $5 billion in revenue and 15,000 employees. And our colleague here at Bloomberg, Cameron Krice, actually said that he calculated, according to his calculation, more than 40% of the S&P 500 qualifies for participation in this so-called Main Street lending program. These are not because these are bad people. It's just the nature of things. They tend to go to the big guys. You're exactly right. At the same time, politics pushes away from giving it to states, right? Because the politicians in Washington want to have the control over it.
Yeah, they want to have the control. They also want to have the credit. I don't mean to Monday morning quarterback, but I think in a way we've gotten this exactly wrong, exactly backwards, if I can say that. The federal government has one thing nobody else has in addition to the ability to print money, and that is they are the most powerful purchasing agent in the world and the most powerful distributor in the world. And so I think the federal government should have been in charge of testing and distribution and PPE from the get-go. That horse is out of the barn. But I think we should have had the states distributing as much of this money as possible. This isn't about who gets credit, although politicians frequently think about who's going to get the credit. It is about effectiveness. And I think what we're seeing is the bigger going to get bigger, The wealthy are going to get wealthier. The connected are going to get even better connected. And meanwhile, those who truly, truly may not be able to survive without help, I worry that we are not getting enough help to them, and I think the data supports that.
Well, and that, of course, is true for the smallest of the small businesses. It's also true for workers. I mean, now we're 30 million people out of job over a course of 6 weeks. No end in sight here. How long is this going to go on? Because it feels like it's going to go on longer. This is not going to be a quick bounce back. What do we do about that?
Yeah, it's not going to be a quick bounce back. And again, I think 2 weeks ago, David, you and I talked about this. This is not a V-shaped recovery. This is going to be a long, slow slog for a whole set of reasons. Number one, because governors are taking their time. I mean, different governors are making different decisions, but this isn't all going to open up at once. Number two, these are tough decisions for businesses, as we've talked about. Do I reopen? Do I not reopen at 25% volume, for example? Yeah. What do I have to do to protect my workers? But they're also tough decisions for consumers.
Yeah.
Am I safe? Do I actually want to go back and do all these things? All of that says it's a long slog.
Yeah, once you open it up, will people come back? That's a good question. It's always great to have you with us, Carly. Really appreciate it. That's Carly Fiorina. She's founder and chairman of Carly Fiorina Enterprises and Unlocking Potential. That will do it for today and for this week, for that matter, for Balance of Power. I'm David Weston. Thank you for joining us. This is Bloomberg Radio.
That saying, success breeds success.
The pressure washer that means your patio is barbecue ready. The 4K projector that brings the thrill of the cinema to you. The yoga mat that turns your lounge into a studio. With a choice of ways to pay, you can make the most of your leisure time. You can say yes when it matters most at very.co.uk. Goods and services provided by Shop Direct Home Shopping Limited. Credit provided by Shop Direct Finance Company Limited.
Long have I waited.
The epic finale.
Good people will fight if we lead them.
Of the legendary saga can be yours.
The Force will be with you.
Always.
Own Star Wars, The Rise of Skywalker.
What are you doing there, 3PO?
Taking one last look, sir, at my friends.
Get it now on the Apple TV app.
Dating can be tricky, especially when you can't meet face to face. So it's time to get creative with the easy way to replace physical dates, Video Call from Bumble, the dating app where women make the first move. Here's Anna Williamson and Tom Reed-Wilson with some tips on connecting online.
It's a bit harder to flirt with limited body language, but nothing beats a smile and some eye contact to show them you're interested.
And have an activity plan for your date. This will help break the ice.
Download Bumble today.
Picture in your mind a stylish Audi with striking LED headlights, sporty alloy wheels, and some of our most advanced features, including a 10-inch digital cockpit and smart assistant systems like lane departure warning. Picture what that Audi looks like. Now think smaller. The Audi A1. It's not a small car, it's a small Audi. Visit audi.co.uk. Audi. Vorsprung durch Technik.
Fraudsters are getting more and more sophisticated, and it's easier than ever for people to make an honest mistake and lose their money. TSB doesn't think anyone should have to pay for being an innocent victim of fraud on their account. That's why they've created the TSB Fraud Refund Guarantee. To find out more, visit tsb.co.uk. Terms and conditions apply.
At Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, TGIF, everyone, live from New York and New Jersey, streaming on YouTube. It is Friday, May 1st, 2020. Carol Masser along with Jason Kelly, TGIF, but I got to tell you, if you're a bull in this market, you're not too happy today. And I think, Jason, it has a lot to do with being a week of mixed messages on so many different fronts.
100%. Our producer, our very smart producer, Ariel Agami, pointed that out on our pre-show call, and it's the perfect way to capture it. I mean, we've got it from the lawmakers across the country, including Washington. We've got it from the medical professionals. We've even got it when it comes to corporate earnings. You look at Amazon versus Apple and the way that the market referred to those and also digested them. It's a strange world of push and pull.
Absolutely. Sometimes it's okay. I have no financial guidance for the rest of the year, and sometimes it's not. So we're going to get into that over the next couple of hours. We have an incredible lineup. First up, though, let's check on that trading day. Here is Charlie Pellet. Happy Friday.
Happy Friday. I'm not working from home. Of course I'm happy. I'm back in the office. I've got the Dow, the S&P, and NASDAQ all slumping right now, with the S&P down 3.1%, S&P tumbling 89 points, the Dow down 641. We'll call that the low of the day, close to it, down 2.6%. NASDAQ down 307. That is a drop for the NASDAQ Composite Index of 3.5%. You guys talked about earnings. Apple, for example, down 1.3%. Amazon slumping 7.2%. ExxonMobil down 5.7%. The 10-year 0.62%. We've got gold up 0.7 now, $16.97 the ounce. West Texas Intermediate crude up 5.5%. $19.87 the barrel, getting close to $20. I'm Charlie Pellet. That is your Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week, a Friday edition. Yes, it is Friday. I was talking to a colleague before we came on the air, and she was just saying, it's been a long week.
It's been an incredibly long week. I'm not quite sure why. I think because there was this yin and yang of advancements, wait, not so fast, on so many different fronts.
Well, as you say, we have got a killer lineup to break it down with us. Our doc, Ian Lustbader, Stu Leonard, well-known to people around these parts, at least Ken Feinberg, well-known across the country for times of crisis.
Yeah, the go-to guy, as you said on our planning call, no doubt about it. And we've also got the Unilever CEO, Alan Jope. I caught up with him for a big Bloomberg breakaway event. We did that virtually, a great lineup of individuals. But Alan Jope runs this massive global company, and we talked about so much about what work looks like, the labor force after the crisis, but we also talked about that really tricky balance between profits and taking care of workers in your community.
We're going to talk with Barry Ritholtz, another familiar name to our audience, part of the Bloomberg family. He's got a very provocative piece in this week's Business Week, and we're going to round out the show with Doug Steiner. You may not know him, but you know his work if you live in New York City. I mean, he is right at the center of making movies.
All right, let's set the Business Week agenda for you on this Friday. With so much going on, we've got a great duo. Gina Martin-Adams back with us, Chief Equity Strategist at Bloomberg Intelligence, certainly very familiar to our Bloomberg audiences, on the phone from New Jersey. Dave Wilson is with us, stocks editor at Bloomberg News, joining us on the access line from New Jersey as well. Gina, I want to start with you. We're kind of falling apart, it feels a little bit, but I don't know. How do you see the equity trade right now?
Yeah, I think this is a little bit of pullback after an absolutely rip-roaring April. I think a lot of people kind of came through April and said, wow, how did we get such an extraordinary gain in the midst of all this fundamental weakness? I think the other thing you have is, when we kind of knew this was coming, the big tech stocks not really reporting exactly what investors had wanted to hear. And that was a big part of this earnings season, was the sentiment around, okay, there's going to be a ton of weakness, but there are going to be bright spots in the index. Those bright spots are going to be some healthcare companies, some technology companies, maybe some consumer staples companies. And this week has been, for us, a little bit about some disappointment on the tech front. It's not that these companies are turning over. It's just that they're not really satisfying expectations, which were for them to really hold up the index, in my mind.
Well, Dave Wilson, come on in here, because tech has been a theme that we have talked a lot about. The NASDAQ, it's now down 4% for the year. It was flirting with being flat there for a little while.
Certainly was. And, you know, you talk about disappointment, and you have to look at Amazon front and center. I mean, as they looked ahead and talked about what they're going to have to spend to keep their workers safe in their warehouses, because of the coronavirus. I mean, we've kind of seen this story before, and in terms of the company being able to just go out and spend lots of money to accomplish something, and, profits, either they come or they don't. And so that's what the CEO, Jeff Bezos, is looking at this point. People don't like the idea. I mean, Amazon's down about 7%, and we're seeing sort of all the other major technology-type companies lower as well. Apple's kind of gone back and forth today, but it's down a little more than 1% after their results. I mean, they talked about, CEO Tim Cook did when he talked to us anyway, about how late March, early April was pretty depressed in terms of their business. It started to pick up a bit later in the month, but there's a whole lot of back and forth there. And what really jumps out, arguably, is you've got a day where crude oil is actually up, and energy stocks are the worst performers in the S&P 500. A lot of that, no doubt, tied into ExxonMobil, reporting their first loss in decades. Shares down more than 5.5%. Chevron also weighed in and is lower by 2.3% as we speak.
We're going to talk about that a little bit later on. It's also the cover story of the magazine this week, so more on Exxon to come. All right, team, thank you so much. Gina Martin-Adams, Chief Equity Strategist at Bloomberg Intelligence, along with Dave Wilson. He'll be back a little bit later on, our stocks editor at Bloomberg News. Let's now go to Virginia Governor Ralph Northam for an update on the virus.
Beds that we have available throughout the Commonwealth of Virginia. The blue line on the bottom shows our COVID cases in Virginia, and as you see, it has stayed fairly flat. And that, by the way, is what allowed us to open up our hospitals today and our outpatient providers to be able to do elective surgeries. One way we're boosting our PPE is by sanitizing what we already have, and we've made great progress with our PPE. These pictures here show innovative new PPE cleaning systems from Battelle. These systems have multiple units that are each the size of a storage container and can clean up to 80,000 masks per day using a hydrogen peroxide vapor. PPE can be decontaminated and reused 20 times without degrading performance. This will be a big help to our medical facilities and our first responders. Virginia is receiving 3 of these from the federal government. Our first Battelle unit is being built in Blacksburg, where we are sharing it with West Virginia and Tennessee. We are starting to receive materials to build units in Richmond and in Hampton Roads. We expect all of these systems to be operational within the next week. Once all 3 units are operational, we will have the ability to decontaminate up to 240,000 masks in the Commonwealth per day. A stable supply of PPE is key to moving forward, and you can see that we are in good shape and getting better every day. Another key that we've been talking about every day is our testing capability. We have made tremendous progress. On Wednesday, we tested more than 5,000 people, our highest one-day number ever. Yesterday, we grew that number to another new record, testing more than 5,800 people. That's around a 15% increase in one day. We're moving forward aggressively, and I'd like to ask Dr. Karen Remley to explain how, but I want to take this opportunity to thank Dr. Remley for helping with this project, and also the various people that are volunteering around the Commonwealth, to include our National Guard that have really helped us ramp up this system. So, Dr. Remley, welcome.
Virginia Governor Ralph Northam holding a briefing on COVID-19, of course, reaching out to some of the key people on his team and who are handling that situation. We'll continue to monitor and, of course, bring you any of the headlines that you need to know. We'll do that in our World and National News updates. Well, it's an interesting day, and I do think about the week overall. So much going on and so much at play, and I think, investors at some point, which, as Gina pointed out, I love what she said, after a rip-roaring April, it's not a surprise to take maybe a little bit of a breather, especially when companies come out and remind you that we don't have a whole heck of a lot of visibility. We don't exactly know what it's going to look like on the other side. And so there are a lot of questions about the second half of the year.
Well, I mean, I've been thinking about it in these terms. You look at your 401k, or you look at just the performance of the stock market, and you contrast that with the fact that the state of New York's governor just said no more school for the year. It's like, wait, what? I mean, that if that doesn't sort of like jerk your head one way and then the other, I don't know what does in many ways. And maybe that's a little parochial of me, pun intended, but that's how I think about things.
Well, Judy Smith, who was part of our Bloomberg Breakaway event, she is basically the inspiration for the ABC hit series Scandal, but she is a crisis expert. She's called the Fixer. And she said one of the things that we're going to have to start thinking about is, okay, you close schools. What does this mean for all those workers who now have kids at home, right? That you were maybe thinking, okay, maybe I can get them back for maybe late May or part of June or something. What happens to those summer programs that maybe aren't going to happen? I mean, we really need to think about a lot of things, especially as we try to get everybody safely back to work. It's not easy.
I think it's fair to say that getting back to work just got pushed back, at least in New York, pretty dramatically with that school closure. And again, maybe I'm speaking a little too close to home, but that certainly is what folks are talking about. Let's get to Bob Moon now. He's got world and national headlines. Hey, Bob.
Jason, thank you. Mayor Bill de Blasio had already announced his decision on New York City schools weeks ago. Today, Governor Andrew Cuomo made it official. Schools and colleges in the state will stay shuttered through the end of the academic year because he can't guarantee the risk is passed.
We don't think it's possible to do that in a way that would keep our children and students and educators safe. So we're going to have the schools remain closed for the rest of the year.
The governor declined to discuss when regular classes might reopen, saying the fall is a long time away. The Trump administration is more intent on pointing the finger at China for early missteps that harmed an effective response to the COVID-19 virus. Bloomberg's Irv Chapman reports.
Democrats have also been critical of China's behavior, now including the crackdown in Hong Kong. Political strategist Greg Valliere of AGF Investment said in a Bloomberg interview, which could move action by Congress.
Doing something to curb the supply chain between China and the U.S. I think that there could be legislation penalizing U.S. firms that rely still on Chinese medical products, pharmaceuticals, and there could be legislation to incent companies to manufacture here in the U.S.
Valliere said China's behavior and President Trump's and Vice President Biden's reactions would be a campaign issue in the fall. In Washington, Irv Chapman, Bloomberg Radio.
Joe Biden is categorically denying allegations from a former Senate staffer that he sexually assaulted her in the early 1990s. Phoning into a radio show today, President Trump seemed to relish the accusations his Democratic rival is facing.
This is an amazing situation. This is what's going on here is an amazing situation. You want to know the truth.
Trump was speaking on Westwood One's Dan Bongino show. Global news 24 hours a day on air and on Quick Take by Bloomberg. I'm Bob Moon. And back to you, Harold and Jason.
All right, Bob, thank you so much. So in terms of mixed messages, I feel like we got some mixed messages this week on the medical side too, Carol. Agreed. And it's just one of these moments where we're trying to find the way forward, right?
Yeah, exactly. And especially on a day where I was reading stories about, hey, folks, get ready for a 2-year outbreak when it comes to the virus. And we're trying to figure out, okay, can we get a vaccination in 9 months? Can we get it in 2 years? What does it take? Dr. Ian Lustbader is always our voice of reason. He's clinical associate professor of medicine at the NYU Langone Medical Center. He's back with us on the phone in New York. Ian, nice to have you back with us. So where are we in all of this? Can you kind of filter through what makes sense, what doesn't make sense?
I hope to. Thank you. To me, the COVID-19 story is really like Charles Dickens' The Tale of Two Cities, which he wrote in 1859. We have the outpatient story where, patients are seen by telemedicine, and many of them are really getting cabin fever. They're anxious, depressed, on home isolation. They've gained weight. We call it the COVID-19, like the freshman 15. They're gaining the COVID-19 due to inactivity. They miss friends and family, kids and grandkids. And many have mild COVID symptoms, cough, fever, chest pain, diarrhea, muscle ache. And most of them will be okay. And then we have the inpatient story where really, I was rounding in the hospital earlier today, critically ill patients, severe pneumonia, heart and kidney failure, really due to these microthrombi or clots. And many have risk factors, diabetes, hypertension, COPD, obesity. And really diagnosis is like the tale of two cities. We have nasal swabs and blood tests, which are now more available, so we're ordering a lot of those outpatient blood tests. And many patients are coming back negative. So they say, when can we leave the house? So that's a tale of two cities. And treatment is like a tale of two cities. We've learned a lot of medications are not helpful. The hydroxychloroquine and Zithromax clearly did not pan out. And then we have sort of maybe helpful medications. The IL-6 inhibitors, remdesivir, maybe those have some issues.
Right.
And maybe convalescent plasma. That is one of the recent studies that we're doing now that we know people have antibodies. We're collecting those and infusing them. And that may be really a breakthrough. We'll have to see how that is. And that actually goes back about 100 years. These convalescent antibodies were used 100 years ago. Obviously for a different disease, but for a variety of diseases, it's still been used. So, we really have a real dichotomy on where to go and sort of what to do.
All right, so Dr. Lessbader, sorry I dropped off there for a second. We're having all sorts of weird technical issues that are familiar to all of our listeners out there trying to work from home. Probably you as well, Dr. Lessbader, but you're a high-tech guy. You've got it all under control, I know. So I know you've been talking about sort of all these variety of things that we may be approaching, plasma and whatnot. I do wonder, what does it look like sort of on the ground right now? What's the mood among the healthcare professionals that, like you and folks you're talking to, amid these sort of mixed messages that we're getting?
So again, that tale of two cities. I think for those of us who are wear two hats, as outpatient doctors, we're starting to see patients now back in the office. Elective surgery is being permitted, procedures and colonoscopy slowly, that sort of thing. And I think it is interesting. Many patients are afraid to come in. They like the telemedicine. They're afraid that to almost leave the house at this point. And they have a lot of anxiety and depression. And then you've got the inpatient doctors who I think are still very, very stressed and a little depressed as well. With really critically ill patients, some of these patients are in, for a month or more, some even 2 months, and to care for these very complex patients is very draining. Staff changes all the time. No one can be there 24/7. And I think that's a challenge for everyone to maintain that level of intensity with sick inpatients. So a tale of two cities.
I have to say, your tale of two cities resonates so much with us because we talked about mixed messages at the top of our show, which is what we felt like the week was, whether it was on the medical front, whether it was on the earnings front, just so many different kind of back and forths here and confusion. And I think it's certainly playing out a little bit in the financial markets. What do you make of that report by Moderna that says the coronavirus outbreak may last for 2 years and won't be controlled until about 2/3 of the world's population is immune?
Right. So we certainly know herd immunity for many diseases is really what stops these big outbreaks and hospital surges. And since we're just now really beginning to test antibodies on people, blood tests, and so you can go to your doctor, and if you think you've had COVID, they can order an antibody test. We'll have to see about who's paying for all this, but we can certainly order it. And then I think we're going to have a lot more data as to how close are we to herd immunity. But what really gives people herd immunity is that vaccine. And even if we get a vaccine, no one is 100% sure if people will get antibodies. And then we're not 100% sure those antibodies will really prevent you from getting COVID, especially if it mutates. So there's a number of hills to climb, which I think is why the markets are a little unsteady, shall we say.
And so, Ian, what do we do in the meantime, just as human beings living in the world? How should we be thinking about, even the next month or so, maybe the next 2 months? Especially, I think it's tricky for us who live in the tri-state area because we're seeing, other parts of the country reopen, and we can talk about the wisdom of that separately, but sort of day to day, and you mentioned very importantly, I think a lot of the anxiety and depression that people are feeling on the front lines and even here on the way back lines, that's happening. What do we do as folks here?
My sense is in most of life, you cannot be 100% safe. I tell my patients, when they ask about informed consent or procedures, you live in Manhattan, you walk across the street, you can fall in a pothole, break your ankle. There's a risk, there's a benefit, and there's a risk. And my sense is that we're beginning to lose the benefit of home isolation, and we're maybe getting into a higher risk arena. And I think people want to return to a more normal lifestyle, and certainly as the weather gets warmer and people want to go out. So my sense is we may have to take a little bit of risk, since a vaccine is at least 6 months away, and people should wear masks. And I think people who have serious risk factors, and we've gone over those, we can go over them again, but those people probably should be very, very careful. But for the majority of people, I think if they're hand washing and distancing and masks, many should be able to resume a more normal lifestyle. And we'll have to see if the governor and the mayor buys onto that. I think eventually they're going to have to buy onto that, because I don't think we are going to get 100% solution either with medication at this point, certainly not as outpatient medicine, or a vaccine. So I do think the inpatients are better. I think we have better, whether it's plasma or remdesivir, I think we have a few more options for the very, very sick patients, which is encouraging.
So taking risks, does that mean just get used to wearing masks and just being kind of extra careful? I think about the medical community that has been surrounded by this, right? You guys have figured it out. So what does it mean on a more kind of normal basis? Is it just masks? And I do wonder about those more vulnerable. Does that mean they aren't allowed to kind of go out and have a more normal life?
That's a good question. I mean, I think that's an individual decision as to people's individual risk factors. I think if you've got high blood pressure, diabetes, obesity, lung disease, maybe you need to stay in for quite a while longer until the number of cases drops dramatically. And we should know that. We're tracking that. But I think if you're otherwise seemingly healthy, there are many staff in the hospital who wear masks and are up close with very sick patients, and they're negative. So not everyone, obviously, that poor nurse who was in the ER, and so it is. Healthcare workers definitely can get this, but I think it's certainly not everyone who is getting it. So I think we are approaching a time when it will be reasonably safe to return to a more normal existence. And I think we have to do that, not just economically, but psychologically.
Yeah. It's interesting. I was talking to a longtime New York City resident earlier today, has worked on Wall Street and its environs for a long time. And she was saying, one of the things I think we're all anticipating, and I worry about this, is, true, different people are going to make different choices and have different tolerances of risk, and yet we're all sort of out there together. And I do worry about sort of the social contract to some extent almost breaking down, not to be too dark about it, but, sort of confrontations happening, like literally in the streets of New York City, over, one person choosing to wear a mask, another person not, someone standing too close. Like, those are the things that are hard to anticipate, right?
All of these crises, I think, give us opportunities to do good or to do bad. Yeah. And I think we see those first responders who are volunteering, doctors, colleagues, volunteering to go to the hospital, help sick people. And I think you've got people who take advantage and are looting or, breaking into stores or seeing this as an opportunity for crime. But I think at the end of the day, we need to appeal to people's better angels and appeal to them to have that social contract, be careful, try and protect other people, do good things, help other people. And part of that will be just being a little bit more careful. And I think I see people in the street wearing masks. Everyone is complying. Yeah. And I think that should reduce risk. It's not going to eliminate risk. Yeah. We cannot eliminate the risk to zero.
No, right. Yeah, I do think it's amazing how quickly we've all gotten more comfortable. And I do look at someone who maybe doesn't have a mask, and I'm kind of like, wait a minute, you need to have a mask on.
I know. It really is amazing.
Ian, thank you as always. We really do appreciate all the time you give us and really kind of helping us filter through so many of the stories that are out there and making sense of it. Stay safe. Dr. Ian Lustbader, Clinical Associate Professor of Medicine at the NYU Langone Medical Center. Jason, joining us once again on the phone from New York.
Love catching up with him. A real voice of reason and sort of one of our go-to guys, as we said, right there at the top. All right, let's get to Charlie Pellet now. He's got an update on what's going on in that very red trade.
Hey, absolutely right about that. In fact, the S&P erasing a weekly gain. Indeed, red on the screen here off our session lows over the S&P, now down 80 points, a drop of 2.7%. The Dow slumping 577, down 2.4%. And the NASDAQ is down 275 for the NASDAQ Composite Index this Friday. That is a drop now of 3.1%. 10-year up 132nd with the yield 0.63%. We've got gold up 0.8%, $16.99 the ounce, and West Texas Intermediate crude rallying again today. Nothing like we've seen in previous sessions. Up today by 6%. That is an advance of $1.15 a barrel, now at $20 even. Stocks dropping as investors began May pondering profit warnings tied to the coronavirus and a ratcheting up of tension with China. The dollar rising as a risk-off mood prevails. Lots of questions and lots of speculation about Gilead's drug remdesivir in treating coronavirus patients. Dr. Andrew Pekosh is a professor and virologist at the Johns Hopkins Bloomberg School of Public Health. He was interviewed this morning on Bloomberg Television.
So remdesivir has had a couple of reports out this week. One report from the NIH has shown that there's some significant promise of that treatment, and that if it's given early enough in the course of infection, it seems to improve the time in which people get better and can leave the hospital. A report out of China has suggested it was less successful, but it looks like those patients were being treated much later in the disease process.
And today, Gilead, which makes remdesivir, it is trading lower by 6.6%. The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. A couple of high-profile earnings. Both companies, both tech stocks, moving lower. Apple down 0.9% right now. Amazon shares slumping 6.7%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Charlie Pellet got a little pep in his step, even with the market down, back in the office. He's so happy to be there.
Yeah,
he says it every day.
I gotta say, he is such a great energy and force for us when we're back in the office, and he does love it. He works his little tail off, so he's kind of funny. But it speaks to what Dr. Lustbader was saying, that people are getting a little stir crazy being at home, right? Yeah. And so we need to start, staying at home. We understand the importance of it, and certainly for those who are more vulnerable. But there is also a mental health aspect of this. And we have talked a lot about it on air with many of our guests in the medical community and elsewhere. And that for some folks, especially, living in New York, if you're at a small apartment and you kind of can't go anywhere, if you're on your own, that's going to be tough. That's going to be tough.
Yeah, it takes me back to, some conversations that we've had, like with the CEO of Headspace and the founder of Made For.
Yes.
People are really starting to know that they need to invest in this side of themselves, especially at a time when things are stressful. They really are. And listen, I have no idea what it's like to really be on the front lines, but I can tell you, just talking to friends and neighbors, it is anxiety is high. That's for sure.
Yeah, absolutely. All right, we do want to get to our next guest because one of the concerns throughout the pandemic has been the access to our food supply chain. So far, it seems to have worked despite some empty shelves and limitations on purchases, but the shutting down of meat processing plants over health concerns for workers, that has definitely created another round of worry about shortages of meat supplies in particular. Let's get into that with Stu Leonard Jr., the president and CEO of Stu Leonard's. They have been around for more than 40 years and very well known for those of us who live in the New York metro area. Stu joining us on the phone from Norwalk, Connecticut. Stu, nice to find you here with us. So tell me a little bit about...
Thank you.
Yeah.
Hey, I just want to also mention I am on the front line along with our 3,000 people at Stu Leonard's, and we've been out there every day in the public trying to give our communities food all day. So I know your last guest just said he didn't know what it's like to be on the line. We know, and it's very demanding very demanding today, and I give our team at Stu Leonard's a huge, big pat on the back.
I totally agree that this situation has made us rethink who are those crucial workers, and you know, I don't think we often have walked into supermarkets and thought of it that way, but I certainly have said I certainly feel that way right now because they have kept us, you know, really been taking care of us, and that goes for your workers as well.
Well, and especially given, Stu, the number of people that are coming in and out, and I count myself among a very happy long-time Stu Leonard's customer living here in Westchester. So certainly been the beneficiary. We do want to ask you about, you know, how Carol kicked off the conversation there about the supply chain, because I do wonder for you, what does this look like on the front lines?
Well, first of all, a nice thing about us is we deal with smaller, more family farms. Tyson closed their plant, huge, big plant. There's probably 3,000 people working at it, maybe more. We buy zero from Tyson. So that did not affect us at all. We are buying from the Amish chicken farmer in Pennsylvania. We got an egg farmer down in Pennsylvania. We get fish right out of Maine from small, you know, fishing boats going out. So we've been able to keep a constant flow coming into Stu Leonard's, and I've dealt with these people for 20, 30 years now. You know, we're a family business ourselves, and they have assured me that they will supply us with the food that we need.
And does that mean all kinds of food? I know we were talking about it a little bit in the newsroom. You know, that's, you know, there's high-end meat, there's organic beef, you know, versus kind of regular stuff. I know you guys tend to play into the higher end. That's not, you're not worried about that being short in supply?
Well, you know, we're doing the regular porterhouse steaks and everything, but people do want organic and they do want grass-fed. Those are big growing areas right now. We have not seen a limited supply of those right now. But like every business in America, the virus has affected everybody. You know, the plants out in the Midwest that are doing the meat, they're down like 25 to 30% in their production. And a lot of that has to do with the virus. And the second thing, it has to do with, there's a lot of people that do not want to come to work right now. We give a 30-day unpaid sabbatical to our people to visit their families. We've had over 100 people take advantage of that now. We never expected that to happen. So we've been on a hiring blitz, you know, trying to hire butchers and chefs and bakers right now. And it's tough because the unemployment benefits are so good.
Right. Absolutely. So, you know, one thing, just to go back to supply, and I want to talk about workers again in a second, Stu, but on the supply front, especially given your family and your long history in the dairy business, I do wonder about the dairy supply chain, too, you know, looking beyond the beef and the meat. You know, we've heard about, you know, farms having to dump their milk and things like that. Yeah. How does that get worked out in your estimation?
Well, it's very sad. You know, obviously everybody, you know, especially in the dairy business, you have your cows and they're producing milk every day. They don't know anything about COVID-19.
Right.
And all of a sudden, all the schools closed. And a lot of milk went into the school system. And so there's just not enough demand right now out there for all of this milk that these cows are continually producing. So unfortunately, what do you do with extra milk? You can make butter and cheese out of it. But there's only so much of that you can do. And so, you know, we have, unfortunately, breaks your heart because there's so many people that need food out there today.
Exactly.
But they have had to dump some milk.
I mean, that I have to say, and I understand it's not easy to get, I guess, from point A to point B and get all that excess food to people who need it, but I have to say it just doesn't make sense, and that we can't figure out how to take that food and get it. We're talking to a lot of chefs who've, you know, of course, shut down their restaurants and they're creating, you know, meals to get out to communities where people have lost their jobs and they have no food. How come we can't figure this out?
You know what happens is you know, a lot of these industries have to plan ahead. Like, you know, how many hogs are you going to have? You hear, you know, they're feeding strawberries to some of the hogs right now because there's not enough demand for they overproduce for strawberries. So what's happened with this COVID-19 and the panic buying, and it's just disrupted the entire food chain and also what people are eating today. So, you know, it's been very hard to manage, and everybody's doing better every day, and we're getting it under control. But right now, you're seeing some real blemishes in the system.
I don't want to point fingers because I know this was a truly black swan that nobody really had planned for. But could the government, the federal government, have stepped in and created some better systems off the bat to kind of connect point A to point B, especially when it comes to the food system?
Well, you know, that's the big question everybody has, and obviously Washington is debating that back and forth. But I would just say that we have been in the food business ourselves for 50 years, you know, and we've been through Hurricane Sandy, 9/11, you know, all different snowstorms, you know, right in the metro New York area here, and we couldn't have planned for anything like this. This just, even all the planning we thought we had done, and we've always handled these big things, we felt pretty well, but this was just above and beyond anything anybody, I think, could have forecasted.
So, Stu, you know, you guys have been at the forefront of a lot of things, and, you know, our family at least really counts on you for a lot of the things you described, sort of the sourcing at local farms, and, you know, you have delicious food that you sell. And I do wonder, especially knowing your customer base like you do, how does your business change on the other side of this? What are things that maybe you do less of, you do more of, especially given, you know, you've managed through all of these other crises, you and your family. What does this crisis change on the other side for you?
Well, you know, that is the crystal ball question right there. You know, what is retailing going to look like post-COVID-19? And I think one thing that we definitely have noticed is delivery. We used to deliver 5% of all our food to customers. And now if you go into the store today, 25% are getting it delivered and also curbside pickup. So the question is, what's the stickiness of this? Where's it going to land? Is it going to be 10%, 15%? You know, that's definitely changed. The other thing is a lot of people are buying curbside now. Look at the restaurant business, and you know, everybody's getting curbside pickup. I mean, what will the restaurant look like? A lot of people may say, hey, we really like that we could go and pick that up. So there's some things like that are going to change. And as far as the products go, people are just buying what they normally bought, except more of it. Except for things like hand sanitizer, which we never carried before at the store. We might have had some Purell, which you can't buy right now because it's just sold out. But hand sanitizer, I think, is going to be an item that we will stock at Stu Leonard's in the future. Even, I don't know, but masks.
Right.
You know, everybody's wearing masks. I couldn't even imagine a day in my life where I walked in the store and saw everybody, our team members and our customers, all wearing masks. We have boxes of masks in the store right now. I never would have thought we'd sell them. Yeah. Will people still want to wear masks post COVID-19? I don't know.
Yeah. So, well, a lot of big questions. A lot of big questions for sure. We're going to leave it there. Thank you so much, Stu Leonard Jr., the CEO of Stu Leonard's. And as I say, as a customer, I can vouch for them. It's such a great place. It's one of those things like you go in and just the way it's laid out. It's just
like the way stores are meant to be, right?
It's like a local treasure in a lot of ways. So definitely enjoyed them over the years. And as he said rightly at the top, those guys very much on the front lines, and certainly appreciate all the work they're doing, Carol.
Yeah, really, really important. All right, you're listening to Bloomberg Business Week. Let's get a check on world and national news headlines. For that, let's turn things over to Bob Moon. Hi, Bob.
Hi, Carol. Proceed with caution. as cities and states across America take tentative steps toward restoring some semblance of normal, some officials are crossing their fingers and urging people to heed the message issued by Los Angeles Mayor Eric Garcetti. If you rush the end of the stay-at-home orders, you do so at your own peril.
When people think that suddenly that date comes and, it's like, I can say this as a former Navy guy, it's like the ship coming into port. It's not time to party. It's time to very carefully get off the ship, assess where we are, take some steps forward, and then wait 2 or 3 weeks with those baby steps and see what the impact of them is before you proceed.
Things aren't really going to be returning to normal. In fact, some things will remain a bother. There's about to be a new in-flight accessory for airline passengers: face masks. Bloomberg's Nathan Hager reports.
Delta, American, and United Airlines will all start requiring face masks this month. They're following JetBlue's lead. That carrier announced this week travelers would have to start covering their noses and mouths starting this Monday. That's when Delta and United's mandate will begin. Discount carrier Frontier Airlines will start requiring masks on May 8th. Passengers will have to start wearing them on American, Alaska, and Southwest Airlines starting on May 11th. Nathan Hager, Bloomberg Radio.
Brazil has emerged as Latin America's coronavirus epicenter with more than 6,000 deaths, while the country's Funeral Home Association warns that coffins are running out in the hard-hit Amazon city of Manaus. They're calling for an emergency airlift of thousands of coffins. Global News 24 hours a day. I'm Bob Moon.
25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering the innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
If knowledge is the pressure washer that means your patio is barbecue ready. The 4K projector that brings the thrill of the cinema to you. The yoga mat that turns your lounge into a studio. With a choice of ways to pay, you can make the most of your leisure time. You can say yes when it matters most at very.co.uk. Goods and services provided by Shop Direct Home Shopping Limited. Credit provided by Shop Direct Finance Company Limited.
A half-price dream holiday, wouldn't want to miss that. A takeaway for free, wouldn't want to miss that. And 30 gigs data for just £10 a month on Smarty Mobile. You definitely don't want to miss that. Our Smarty SIM comes packed with 30 gigs of data and unlimited calls and texts for just £10 a month on a 1-month plan. That's why Smarty won Best Value SIM-only network in the U-Switch Mobile Awards 2020. Don't miss out. Search Smarty Mobile. Smarty. Simple, honest mobile. Smarty.co.uk.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
Long have I waited. The epic finale.
Good people will fight if we lead them.
Of the legendary saga can be yours.
The Force will be with you.
Always. Own Star Wars, The Rise of Skywalker.
What are you doing there, 3PO?
Taking one last look, sir, at my friends.
Get it now on the Apple TV app.
Picture in your mind a stylish Audi with striking LED headlights, sporty alloy wheels, and some of our most advanced features, including a 10-inch digital cockpit and smart assistant systems like lane departure warning. Picture what that Audi looks like. Now think smaller. The Audi A1. It's not a small car, it's a small Audi. Visit audi.co.uk. Audi. Vorsprung durch Technik.
Fraudsters are getting more and more sophisticated, and it's easier than ever for people to make an honest mistake and lose their money. TSB doesn't think anyone should have to pay for being an innocent victim of fraud on their account. That's why they've created the TSB Fraud Refund Guarantee. To find out more, visit tsb.co.uk. Terms and conditions apply.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
A social distancing tip.
Keeping your distance from others is important in slowing the spread of coronavirus. So here are some fun things to do alone. Read a book, take a walk, unpack your suitcase from that trip you took last September, paint a self-portrait, catch up on a TV series, do a puzzle. Remember, we should all stay home to lower the risk for everyone. For more info, visit coronavirus.gov.
Let's all do our part, because we're all #AloneTogether. Brought to you by the Ad Council.
Today at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, the S&P, and NASDAQ all lower, very close to lows of the day. Stocks are dropping as investors begin the new trading month, pondering profit warnings tied to the coronavirus and a ratcheting up of tension with China. After earnings, Apple down 0.9%, Amazon down by 7%, ExxonMobil dropping by 6.9%. Here's where we stand. S&P down 82, a drop of 2.8%. Dow Industrials down 594. That is a drop of 2.4%. NASDAQ down 279, a decline of 3.1%. The 10-year up 1/32 with a yield of 0.63%. Gold up 0.8%. $16.99 the ounce. West Texas Intermediate crude up 3.8% now, up 70 cents a barrel at $19.54. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening.
We're losing
Bloomberg.
it. That's happening.
It's been a long week. It's been a long week. It's been a long month, and it's only May 1st. All right. Fascinating story in the magazine. Jason and I have been talking about this one, and I do wonder how long before this one becomes a Netflix or an Amazon series. It's about an individual who happens to be the go-to person when you want to know anything about what's going on in North Korea. Our reporter Josh Dean actually cold called him for the magazine and got one of the strangest stories that you can imagine. So let's get into it. Josh is with us. He's freelance writer for Bloomberg Business Week on the phone from upstate New York. And with us is Joel Weber, editor of Bloomberg Business Week, on the phone from Brooklyn. So, Joel, set the scene for us. I'm assuming Josh called you, or tell me how this kind of came together.
Carol, I've got some incredible news for you, which is that this story is actually 16 years in the making.
Wow.
I was Josh's intern once upon a time, and Josh was like, hey, I really want to try and go to the demilitarized zone between South Korea and North Korea. I think you should try to find somebody in North Korea who could get me in. And I was like, yeah, that sounds impossible. And being the dedicated intern that I was, I went about my sleuthing ways and happened to find a contact that I initiated some emails with and handed them off to Josh. And here we are 16 years later, and Josh every once in a while does a little of my bidding for me. And I said, hey, why don't we tell that story of that guy that we found all those years ago? And it happens to be North Korea's man in Spain. Right, Josh?
Exactly, yeah. I've stayed in contact with Alejandro periodically over those 16 years. Because what happened is Joel made this contact, and I was going to go to North Korea. South Korea would not let you into the DMZ at that time, and neither would North Korea really, but I was going to get on this weird tour, and it got canceled at the last minute because some other reporter got in trouble. But I stayed in contact with this guy periodically, yeah. And when North Korea was back in the news in the fall, Joel said, why don't we see what Alejandro's up to?
And what is he up to? What'd you find?
Who is he?
Well, so... I mean, you kind of have to go back to when this story started. At that time, North Korea did not even, so we're talking 2004, I guess, 3 or 4. North Korea didn't even have an English website, an outwardly facing web presence to the Western world. So the reason we stumbled on this guy is that it was the only website in the world that seemed to be somehow connected to North Korea. And Joel found this guy and started communicating with him, and then I picked it up. And so he's become, he has an official government position now. He's connected to the Ministry of Culture, or the Culture Commission. And he's basically an outreach, some combination of PR and marketing and business development. And if you are a person in the Western world who is not a diplomat and not a very high-level VIP who can get a call back, you have to go through this guy in Spain.
And so now I just got to say, though, now I think actually the Netflix series should be about you two, Joel and Josh, because I think that's kind of the interesting story. Joel?
Yeah, it can go in many different ways. I've known Josh for a really long time. The thing about the story, and Josh, I think, is one of our favorite writers for stories like this, because he's able to kind of find these characters, and then you just go along for a ride with them. And this is one of those ones where, this guy is just sort of full of stuff that you don't know if it's real or not. And, as we sort of, Josh kind of dove into the story, it was sort of okay, well, what kind of deals is he doing? And Josh, what kind of deals come this guy's way? Who's trying to do business in North Korea?
Well, it really runs the gamut. When I was with him, he was getting calls from some guy in Hawaii who wanted to open a McDonald's franchise in Pyongyang, which was a non-starter. But then, religious emissaries or investors from around the world who are just I wonder if there's opportunity in North Korea. And it turns out they're happy to take your money, especially with heavy industry and mining. And of course, you can't actually legally give them your money without violating international sanctions. But if you either don't care about that or you're from a place where those sanctions are not honored, Alejandro will make the introductions for you to invest in North Korean iron ore mines.
And meanwhile, the other thing to know about this guy is that, he's basically broke.
Yeah. Totally unexpected.
He works on commission making deals with North Korea, yeah, and it's not a super lucrative business for him.
And it really goes back to the idea, he's longtime fan, first time liaison. What's the deal with this guy?
It's got to be one of the most peculiar government official stories in the history of the world, I feel like, because he was basically just as a teenager a super fanboy of socialism, and not just European socialism, which is socialism with an asterisk because it's a free market. He wanted pure socialism, and the only place he could find that was North Korea. And he just basically went there and then became this, I will do anything for you guys. He tried to volunteer for the army, and they're no, we don't really need soldiers, thanks, man. But if you could go back to Europe and start talking about us and be our PR outreach guy, and he built a website, he was just very entrepreneurial about it, and he became a fanboy who turned into an actual person who worked for the country.
All right, so what did he tell you about Kim Jong-un?
He swears he's fine.
Do you believe him?
No. The guy hasn't been in public in a couple weeks, but I think anything Alejandro says, well, two things. Has to be taken with a grain of salt because he is to some extent a propagandist, but also he's probably not even getting a straight answer. He's still a guy in Spain who's not Korean and doesn't speak Korean.
which really just sums it all up.
I know. Where do you go from there? So what did you learn new this time? I mean, like, especially given that you both have laid out this amazing backstory of like keeping in touch with this guy. How has the world changed for Alejandro, especially as I feel like North Korea, like it was sort of on the fringes for a long time of certainly the American consciousness, but during the Trump administration, it's become much more so. What did you learn from him that's especially important this time around, Josh?
Well, he's become in some ways more prominent because of all the attention on North Korea, but also probably has been marginalized a little bit because there are actually more ways to contact North Korea now. Like they do have their own website at this point. But I think a lot of it is that North Korea hasn't changed much at all. Even in the however many 20-plus years he's been fanboying, it's still a place that is the most closed-off, most homogenous country in the world, and is largely unknowable still. I mean, I think Alejandro's been there as much as anyone, and he probably still doesn't truly understand it.
Yeah. It's a great story. I have to say, like, in some ways, just a nice departure from everything else that we've been writing and reading about. And you can also check out this story. You can read it, obviously, but also you can listen to it on our podcast feed. So our thanks to Joel Weber and to Josh Dean. I should point out, I was like, when did we talk to Josh Dean before? And this sort of tells you all you need to know about Josh Dean. He wrote a fantastic story about James Dolan, the owner of the Knicks.
That's right.
And which is sort of mind-blowing in a whole different way.
Right.
Anyway, so I would go down the Josh Dean rabbit hole if I were you this weekend.
Well, I'm going to call their new series Joel and Josh, Men in Magazines, rather than Men in Spain. All right. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week, we're going to continue. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is next. Be sure to check out Josh's story in the magazine, online on the Bloomberg, and as we said, on our podcast feed. This is Bloomberg Radio.
That saying
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the Coronavirus Job Retention and Self-Employment Income Support Schemes. For information, go to gov.uk/business-support now.
The garden tools that mean you can grow your own. The fire pit that turns tea time into an alfresco dining experience. The paddling pool that turns your back garden into a water park. With a choice of ways to pay, you can make the most of family time. You can say yes when it matters most at very.co.uk. Goods and services provided by Shop Direct Home Shopping Limited. Credit provided. Subject to status by Shop Direct Finance Company Limited. 18+.
Long have I waited.
The epic finale.
Good people will fight if we lead them.
Of the legendary saga can be yours.
The Force will be with you.
Always.
Own Star Wars, The Rise of Skywalker.
What are you doing there, 3PO?
Taking one last look, sir, at my friends.
Get it now on the Apple TV app.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Fraudsters are getting more and more sophisticated, and it's easier than ever for people to make an honest mistake and lose their money. TSB doesn't think anyone should have to pay for being an innocent victim of fraud on their account. That's why they've created the TSB Fraud Refund Guarantee. To find out more, visit tsb.co.uk. Terms and conditions apply.
Max is dreaming of riding a giant chameleon whilst fighting a clan of ninjas. But in reality, he's helping fight COVID-19 in his sleep. Like thousands of others, he's joined the Dream Team. By using the Dream Lab app, they're helping scientists speed up the search for potential treatments.
I'll fight you.
You go, Max. Search Vodafone Dream Lab and join the Dream Team tonight.
DreamLab app is owned by Vodafone Foundation, an independent charity. Registration number 1089625. Full terms at vodafone.co.uk/dreamlab.
24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, the S&P, and NASDAQ all declining as we move into the final hour of trading. Stocks fell as investors began May pondering profit warnings tied to the coronavirus and a ratcheting up of tension with China. The dollar rose as a risk-off move prevailed. S&P down 81, a drop there of 2.8%. The Dow down 599 points now, a drop of 2.5%. NASDAQ down 276. That was a drop of 3.1%. The 10-year yield 0.63%. Gold is up 1% right now. It's $17.03 an ounce. And West Texas Intermediate crude trading close to $20 a barrel, up 3.9%, up 74 cents at $19.57. Did trade at 20 earlier today. Wall Street, meanwhile, is looking ahead to next Friday's jobs report. Michael Gapin is chief U.S. economist at Barclays Capital. And on Bloomberg surveillance this morning, he told us he is concerned about the double whammy of both job cuts and reduced wages.
I think we have potentially a two-pronged problem here, where we have a lot of slack in the labor market, and at least in the near term, to preserve some employment, some actual wage cuts that may persist for several quarters through the rest of the year.
And oil is heading for its first weekly gain in a month as global production cuts start to lift physical markets and demand shows tentative signs of recovery. West Texas Intermediate crude, as I mentioned, up now by 4.1%. Among some of the oil stocks, after earnings, ExxonMobil down 7% now at $43.23 a barrel. We've got Chevron shares down 2.3%. ConocoPhillips, among some of the other oil majors, down now by 7.2%. Also after earnings today, Apple shares down 0.6%, while Amazon is dropping by 6.8%. So again, recapping, it is a down Friday here, first trading day of the new month. S&P 500 index down 78 points, a drop there of 2.8%. Dow Industrials down 572, down 2.4%. NASDAQ Composite Index lower right now by 3%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, you're listening to Bloomberg Business Week, and this is one of those conversations that I feel like is going to help us frame this crisis in a new and different and maybe more sophisticated and nuanced way. No pressure on Kenneth Feinberg, attorney at the law offices of Kenneth R. Feinberg, well known to our audience for working on so many of the biggest crises of our time. He joins us on the phone from Washington. Kenneth, great to have you with us, as always.
Glad to be on. Thanks.
All right. So where are we in this crisis? What is new and different about this global pandemic versus some of the major things you've worked on, be it TARP, be it 9/11? I could go on and on.
Well, of course, the isolation. Yeah. After 9/11, the tragedy of 9/11, the foreign terrorist attack, everybody, all citizens came together. Very bipartisan way, social cohesion. After the BP oil spill in the Gulf of Mexico, the Obama administration came together with the American people, immediately drafted a compensation plan of action. The trouble with the coronavirus and Mother Nature is that solutions involve isolation. And you don't have that social reinforcement that you would normally have after a most unfortunate tragedy. That makes this particularly difficult to cope with.
Yeah, and to get to the other side of it, we have constantly kind of talked about this, kind of juxtaposition of different forces of wanting to get back to work, wanting to get back to normal, but we also want to be safe. And so, I don't know, how do you see it? How do you see some of the programs that have been implemented, whether it's stimulus programs, that kind of help us get to the other side?
Well, first of all, in order to get to the other side with stimulus programs of any type, whether it's thousands of dollars or trillions of dollars, there are two critically important variables that I've learned about over the years. First, any resolution must be bipartisan. You cannot cope with a disaster like the coronavirus unless everyone comes together in an apolitical way. And to the credit of the Congress, the $1 trillion plus stimulus packages that have emanated from the Congress so far and from the Trump administration largely have been bipartisan, with a minimum amount of polarization and opposition. So that's good. But the second thing I've learned, often to my detriment, hard lessons learned, you better get the money out fast and efficiently. Because all the talk in the world, slapping yourselves on the back about a great thing this is, if you don't deliver what is promised, thereby undercutting the expectation of the American people, the program is going to be tarnished. And every bit more important than enactment of stimulus or enactment of any legislation, however bipartisan, is that you get the money out, you get it out fast, and you get it to the right people, and expectations are met. And if they're not, you are laboring with a real obstacle.
And so it does feel like, Kenneth Feinberg, that some things were done in haste in order to sort of get it out. Mistakes were made. I think most people would concede that point. Is that just to be expected, given the velocity at which this happened? Or were there things that could have been done and maybe can be done better in the future in order to ensure that it gets out and gets out in the right way, these funds?
Well, that's a tough question. On the one hand, there's never been anything quite like this. Coronavirus stimulus in the trillions. I mean, I can empathize and sympathize a little bit with administrators with responsibility for getting the money out. But that may be in mitigation, but it doesn't solve the problem, because it doesn't help if, as an operational matter, whether it's the rollout of Obamacare or whether it's this or any other number of programs, if you tout a solution and then there are problems in delivery, in administration, in operations, so that the money is going slower or not going to the right people, that's a real problem that better be corrected fast, or the citizen disapproval will simply grow.
And it's not just disapproval, right? It's also just there are people out there that have absolutely no safety net. And we know these problems were out there, Kenneth, but I feel like the virus has certainly laid them bare even more so. And we really have left people out there in the cold.
Oh, I think that's right. And it's what magnifies the problem, of course, is what we spoke about 5 minutes ago. People are out there in the cold alone. There's not a whole lot of social cohesion when it comes to the virus, because you have to suffer basically in private, in isolation, where you don't have that social reinforcement from friends, colleagues, fellow employees, etc.
So I'm curious, have you reached out to the administration to maybe give them a hand? Have they reached out to you? Has anyone reached out to you to help in this process?
I've received over the past few weeks a series of calls from various members of Congress talking about whether or not what lessons have been learned so far. Should we do something like a coronavirus 9/11 type victim compensation fund to compensate victims of the virus, health providers, essential workers, victims, citizens? There's been some talk about that. There's been some talk about creating an alternative to liability for companies, where you'll recall during 9/11, in order to protect the airlines and the airline manufacturers and the World Trade Center from lawsuits. There were a series of 9/11 compensation funds created, where I administered funds voluntarily to anybody who took that 9/11 public money. They had to promise not to litigate, not to go to court. And, of course, it worked smashingly. The 9/11 fund, 97% of all the people that could have gone to court rather came into the fund voluntarily. I distributed over $7 billion of taxpayer money. And lawsuits, there were only 94 lawsuits nationwide arising out of the 9/11 attacks. So that's another alternative that is, I assume, being considered.
Right.
But I don't know where the administration stands, and I don't know where the Congress stands. Those were just, inquiries from congressmen.
And without divulging your private conversations, I mean, what is your at least initial take on the idea of a compensation fund for healthcare workers?
Well, you better be careful. You raise a very interesting issue. Think about it. Healthcare workers may be a compensation fund for them because of their heroism in dealing with the virus at local hospitals. Very good. Now, wait a minute. What about the policeman on the beat who contracts the virus, helping people get to the hospital? What about the mailmen? 10 mailmen, mail workers nationwide have died. What about the essential workers now in these food processing plants in Iowa? You open this up to a 9/11 type fund, and you immediately confront a very thorny public policy issue. Who's eligible? Who's eligible for this?
Well, it's interesting you say that. It's interesting you say that, Kenneth, because we just had a conversation earlier in the show with Stu Leonard, who runs Stu Leonard's here in the tri-state area. I'm sure you're familiar with it. And he essentially was saying, and rightly, I think very few would disagree with him, his workers, his grocery store workers, they're frontline. They're dealing with people every day, all sorts of people coming in, and they are providing an essential service. So you open that up. You think about restaurant workers. We talked with Tom Colicchio yesterday. I mean, these are people who really could make a strong case. So you're exactly right.
I mean, bad things happen to good people every day in this country. I remember during my administration of the 9/11 fund, dear Mr. Feinberg, my son died in Oklahoma City in the terrorist attack committed by an American terrorist. Where's my check? You better be careful. I'm not saying you can't do it, but you better think this through.
Well, that's a really good point, Kenneth, because some of the discussions we are having too, especially when we talk about state bailouts, city bailouts, where do you draw the line, especially where there were, or, when you look at some of the industries, the restaurant industry is a tough one from the get-go, even when it's successful. Who do you help out when you're talking about stimulus, or do you do blanket checks because you just got to protect our economy, essentially?
Well, that's why we have elected officials making the judgment call with the understanding that the ballot box, at the end of the day, it's the ballot box that determines whether those public officials in Congress and state legislatures, the administration, governors, mayors, did they make the right call? And the 9/11 fund was exactly the right call made by the Bush administration, bipartisan, supported by not only Senator Hagel of Nebraska, but Senator Kennedy and Congressman Gebhardt and Senator Schumer. So, I mean, you had that type of consensus. Whether you can get that today and how you want to, if you want to, try and draft a compensation program designed to minimize lawsuits and how broad you want to create that without making it impossible. Those are very, very difficult, challenging public policy issues to be resolved.
Well, and one of the other issues, and we've sort of alluded to this a little bit, Kenneth Feinberg, is this notion of, are you helping workers by bailing out or giving relief to a big company, a big airline, a big corporation, whether it's in the hospitality industry, transportation industry, or something else? Or should you be going directly to the people, directly to the workers? How do you find that balance?
Well, that's a very difficult balance. Now, in Europe, as you know, they've largely gone in the direction of bailing out the companies with the admonition, the requirement, the prescription that bailout money be used to maintain as close to full employment as you can.
Right.
No pass-through to shareholders, no pass-through for profits. It's more direct assistance designed to avoid unemployment compensation by keeping workers on the job. Now, in the stimulus package in the United States, it was really the opposite. It seems that most of the money designed to help workers were in the form of unemployment, supplementing existing unemployment compensation. To what extent should any stimulus package that goes to airlines or to Fortune 500 companies or to small businesses be required to use those funds to maintain employment so that you can stay in business? Yeah. Again, tough policy choices.
Yeah, absolutely.
Well, we'd love to keep in touch with you on this. We always really value your expertise and your experience. No one literally has the experience you do in dealing with all of this. Kenneth Feinberg, attorney at the law offices of Kenneth R. Feinberg, joining us on the phone from Washington. He's seen it all, Carol. I mean, he really has.
TARP,
and,
BP, Deepwater Horizon, the Boston Marathon bombing, Boeing's compensation for 737 MAX families. I mean, you're right. Nobody has that experience.
Absolutely.
So great person to check in with. All right, let's also check in with our own Charlie Pellet, get a check on some of the big business stories, and also take a look at that trading day. Hey, Charlie.
Hi, thank you very much. Great conversation. I wanted more. We've got the Dow, the S&P, and NASDAQ all declining here. 45 minutes to go ahead of the closing bell, with the S&P this Friday down 74, a drop there of 2.6%. The Dow down 553, a drop of 2.3%. NASDAQ lower by 251, that's a drop of 2.8%. Bottom line, off-session lows, but a down Friday nonetheless. The 10-year up 3/30 seconds with a yield of 0.62%. Gold up $17 the ounce, rallying 1% right now at $17.03. And West Texas Intermediate crude up 4.25%. WTI now at $19.64. After earnings, Apple down 0.6%. Amazon down 6.7%. ExxonMobil lower by 7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Let's head down to Houston right now. We go straight to the man in charge, Houston Bureau Chief Joe Carroll for Bloomberg. He joins us on the phone from that fabulous city, a city that is certainly reeling to some extent from what we've seen in the oil market, and the news about Exxon today not helping at all. Joe, how are you, my man?
I'm good. Thanks.
Good. All right. So tell us about Exxon. Obviously, the cover story in this week's Business Week dove into everything that's been going on there. What did you see in the numbers that is the most important for people to understand?
Well, nobody really saw this coming today. We knew the first quarter had been rough. It was the worst oil market collapse ever in history, price-wise. But Exxon doesn't lose money, and this morning they posted the first loss in as far back as our records go, $610 million. Their rivals have had tough quarters. They don't lose money, so it was quite a shock for folks in Western industry.
God, the cover story, Joe, is all about Exxon's path to mediocrity. And it's not like this has happened overnight. It's also not just necessarily because of the collapse in the energy markets. I mean, this is a company that's been spending big on a lot of different projects. So where are they now? And what's their future? Yeah. I mean, we talked earlier in the week that this isn't a company that's going to go away, but yet you do rethink their future.
Yeah, in the past, they were such a bulwark, and they had made such good long-term decisions that when there was something like a hiccup or even a really bad market like now, Exxon would be fine. They could glide through it because they were so strong and frankly so rich. But they've had a series of major missteps, which my colleague Kevin Crowley pointed out and Brian Gurley pointed out in the Business Week story. Everything from buying XTO, which was a shale gas pad right before gas went in the tank. They went big in Russia, and then Russia was shut down by sanctions. And so their major investment orders in the past, those would always build them up and give them the fortitude to thrive in a situation like this. They just don't have that running room anymore.
So, Joe, hold on for 1 second. We're going to take a break and try and call you back. We're having a little trouble with the line there in Houston. We're talking with Joe Carroll. He's our Houston bureau chief about Exxon. And, Carroll, I have to say, the cover story is so illuminating about this company, especially the velocity, as it were, at which this all changed for Exxon in many ways, and the stature that it had at one moment that is so dramatically diminished.
Yeah, absolutely. And it talks about, the story goes into all of the details, and basically they say it's been, a decade's worth of miscalculations, whether it was shale oil, whether it was Canadian oil sands, and even a big mega deal that was done with Russia, in Russia, I should say. And so they spent so much on projects that, we talked in the story, or the reporters did in the cover story, about how the company has to borrow to cover their dividend payments. And you and I talked this week that when you invest in some of these companies, some of these big oil companies, it's about the company. It's obviously about the fundamentals, but it's also, you get usually this really rich dividend.
Yeah.
And as an investor, you expect it. So it's hard for them to just cut it, and get rid of it.
Well, and as Joe sort of alluded to, it's like that sort of fortress balance sheet, right? You're sort of investing in this notion that this is such a behemoth of a company that they're going to be able to weather just about anything. And by the way, up until this moment, they sort of have.
Yeah, exactly. And what's interesting too, and Joel Weber pointed this out with us, is he said the numbers don't lie, that Exxon needs a break-even price of $60 a barrel for 2020, $5 more than BP, $10 more than Shell and Chevron. And we know oil is a lot cheaper than that is now. So it's not just about the big macro trends, but it's against its competitors in terms of how it will do.
All right. I think we have Joe Carroll, our Houston bureau chief, back on the line with us. So, Joe, I got to ask you, especially given you're the guy in charge down there, how does this play across Houston? I know that having grown up there, I know that this is an economy that has diversified somewhat, but this is still an oil boom town. This is still an energy town at its core, right?
Yeah, when companies like Exxon and Chevron start cutting production, laying down drilling rigs, basically going inactive, that's a real punch in the gut to a place like Houston, and then even more so to your towns in the western part of the state that are completely reliant on crude oil. As you said, Houston is diversified, but it's still an oil town. So there's thousands of layoffs going on. There's furloughs, and then there's all those people who are hanging in the balance, wondering, because we're not through the worst of it yet. These numbers we saw from Exxon today, they were first quarter. That's 3 weeks before crude oil went negative. So there's much worse, results to come. And so, everybody's sort of walking on eggshells around here.
What does it tell us about other players and the big integrated, or some of the other big integrated oil companies, Joe?
Well, part of the reason Exxon has been hit so hard are the long-term decisions that the Business Week article spelled out in great detail. But another part of it is that Darren Woods, the CEO, decided he was going to go against the rest of the industry. The industry was already going into sort of a downward trend because of the supply glut before COVID-19 hit us. And he said, look, this is the time to invest. I can get all my services and my pipes and everything I need much cheaper because no one else is expanding. So he had this massive $33 billion expansion plan for this year. And then the bottom fell out of oil, and they simply don't have the cash to fund it. Now, Exxon can borrow. They still have a good credit rating. But the question a lot of investors and analysts are raising is, well, how long can you sustain that kind of borrowing without having to cut your dividend? They froze their dividend, but they haven't cut it.
Right. So, Joe, go back to those sort of existential issues that are underlying all of this. The supply clearly is a big part of the issue, but also there's this whole sort of big global question around the future of energy and what we use, what we consume, even virus notwithstanding. How does that play out from here for Exxon and some of the bigger players?
Yeah, it's really the great unknown, and they're staring into this abyss. The CEO of Shell just earlier in the week said, "Look, we think that consumer patterns, how consumers use our products, our gasoline and our diesel and our plastics, that's going to change permanently when the lockdowns end. They don't know how much, But if you think about it, will we even still have a rush hour like we have now? Will folks be driving to the office? I mean, there's going to be some permanent. How many companies are going to keep large amounts of their employees working at home? All of that will change drastically what we buy from the oil companies.
Yeah, I mean, and I just think about, Carol, the idea of, if we're traveling less, and as Joe said, if we're commuting less, if commercial real estate changes, energy consumption patterns all over the place are really, really going to change.
But the thing is, Joe, and I was hearing some stories this morning about China, and that because people are nervous about getting on mass transportation, they're getting into cars more. I mean, the long-term trend still bullish for oil, or what? And just got about 30 seconds here.
Yeah, and that would be Exxon CEO's, his case is, look, as long as population is growing worldwide, there is more demand for energy. And there are few forms of energy more concentrated than petroleum. So, yeah, the long-term case is totally bullish. The problem is you got to get to that long term.
Yeah.
And you have to get through this quarter.
Yeah. All right. Well, great stuff. Great perspective as always. Joe Carroll, my fellow bureau chief, running the Houston bureau down there for us.
You just get so happy when you're like that Houston or Atlanta thing.
I know. Listen, Houston's it's an amazing town. As Joe and I said, it's an energy town. But it really is. It's a pretty amazing place. You hate to see it sort of back on its heels with some news like this, but they'll figure out a way.
All right, you're listening to Bloomberg Business Week. Carol Massar along with Jason Kelly. This is Bloomberg.
This is a Bloomberg Money Minute. Stocks are sharply lower in the final hour, on track for a weekly loss. Quarterly results from Apple and Amazon highlighted the impact of the coronavirus pandemic. The Dow Jones Industrial Average is down 558, the S&P 500 down 75, the Nasdaq Composite down 254. Carnival shares are taking on water, down nearly 12%. A House panel has opened a probe into the cruise company's handling of COVID-19 outbreaks on its ships, which resulted in dozens of deaths. U.S. oil exploration is screeching to a halt. With crude prices collapsing, explorers shut down 14% of their drilling rigs this week. In the past 7 weeks, more than half of the U.S. drilling fleet has gone quiet. Americans are cleaning up during the pandemic. Literally. Bed Bath & Beyond says vacuum cleaner sales are up 110% in the past 8 weeks versus last year. Larry Kofsky, Bloomberg Radio.
Imagine being fired because of who you love. Imagine being denied medical treatment because of who you marry. Imagine being evicted because of who you are. Millions of Americans don't have to imagine this. They have to live it. Because in 31 states, it's legal to discriminate against LGBT people. Get the facts at beyondido.org. Brought to you by the Gill Foundation and the Ad Council.
The world's financial decision makers connect on the Bloomberg terminal. The buy side and the sell side together, collaborating across markets and countries in real time, sharing ideas, negotiating trades, and forming an influential network of over 325,000 financial professionals that helps power global markets. Isn't it time you join them? Request a demo at bloomberg.com/professional.
Are you interested in a challenge?
Long have I waited.
The epic finale.
Good people will fight if we lead them.
Of the legendary saga can be yours.
The Force will be with you.
Always.
Own Star Wars, The Rise of Skywalker.
What are you doing there, 3PO?
Taking one last look, sir, at my friends.
Get it now on the Apple TV app.
Picture in your mind a stylish Audi with striking LED headlights, sporty alloy wheels, and some of our most advanced features, including a 10-inch digital cockpit and smart assistant systems like lane departure warning. Picture what that Audi looks like. Now think smaller. The Audi A1. It's not a small car, it's a small Audi. Visit audi.co.uk. Audi. Vorsprung durch Technik.
Fraudsters are getting more and more sophisticated, and it's easier than ever for people to make an honest mistake and lose their money. TSB doesn't think anyone should have to pay for being an innocent victim of fraud on their account. That's why they've created the TSB Fraud Refund Guarantee. To find out more, visit tsb.co.uk. Terms and conditions apply.
Where will 2020 take you? Somewhere where people care. About each other. About our planet. About creating a better world for everyone. And becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Typical Danny. Last night I was chilling with my girls, but ended up spilling my Chardonnay all over my fave lilac nightie when I saw the photo I was tagged in. State of my fake tan. But no worries. Just one wash and my clothes will smell perf with Surf. Surf gives you long-lasting fragrance with natural essential oils. Find your fragrance in Surf's laundry range.
This is an important message from the government. For now, we must all still stay at home. It can be hard, but it's making a difference. So please keep going for the ones you love. Keep going for every key worker on the front line as they keep going for us. Keep going because together we will beat the virus. To all of you making sacrifices every day, thank you. Stay home, protect the NHS, save lives.
Helen is dreaming of fighting a flock of 40-foot flamingos. But in reality, she's helping fight COVID-19 in her sleep. Like thousands of others, she's joined the Dream Team. By using the Dream Lab app, they're helping scientists speed up the search for potential treatments.
I'll fight you.
Keep fighting, Helen. Search Vodafone Dream Lab and join the Dream Team tonight.
Dreamlab app is owned by Vodafone Foundation, an independent charity. Registration number 1089625. Full terms at vodafone.co.uk/dreamlab.
Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You got to save your dancing until the actual music from Dave Wilson comes on. That's cool that like the Bloomberg music has got you going, but
just getting warmed up here.
We're gonna have Dave Wilson just ahead with his chart of the day. I hope it's a good song.
I do too. Can't wait. All right, first up, let's get a check on your top business stories. See what's going on. Got 29 minutes to go. Charlie Ballard.
Red on the screen. Looks like it's going to be a losing week. Do want to begin though with some headlines out of California, where Governor Gavin Newsom is said to be, quote, very close to announcing changes to a stay-at-home order. He says an announcement could be coming next week. Meantime, lots of questions about testing as a way to help end or speed the end of the lockdown and getting people back to work. Dr. Andrew Pekosh is a professor and virologist at the Johns Hopkins Bloomberg School of Public Health. And on Bloomberg Television this morning, he told us there are lots of hopes for antibody tests.
Over the next couple of weeks, we should get some idea of whether or not antibodies, what kind of antibodies are mediating protection from reinfection. And once we know that, we can really go after people in the population and identify people who should have a higher resistance to infection. And that will then really allow us to come forward with a much more detailed plan for how to open up our economy and loosen some of the public health interventions that most of the world is currently under.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. American Express, long synonymous with premium travel rewards, is tweaking its Platinum card. It will now offer a meditation app along with credits for streaming services as the coronavirus pandemic forces its customers to stay at home. Shares of American Express down $2.63 right now, $88.62 on AXP. The House The Committee on Transportation and Infrastructure has opened an inquiry into Carnival Corp's handling of the COVID-19 outbreaks that resulted in more than 1,500 confirmed cases of the novel coronavirus aboard its cruise ships, as well as dozens of passenger and crew deaths. We've got Carnival down now by 12.5%. Stocks lower: S&P down 81, down 2.8%. The Dow down 603 points, down 2.5%. NASDAQ down 277, down 3.1%. 10-year yield 0.63%. Gold up 0.8%, $16.99 the ounce. West Texas Intermediate crude up by 5%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week right here on Bloomberg Radio.
Somebody help me, yeah. Somebody help me now. Won't somebody tell me what I've done wrong? I need someone in my
Just don't even.
I can't.
Wait. Is it the Spencer Davis Group?
Oh, my God. Carol Massar comes through.
She just Googled it.
Yeah. Really?
Well, darn yes.
Okay.
There's no way she was getting that off of like...
Either that or a birdie named Paul Brennan, our producer, whispered in her ear. I'm not sure which.
I know. Paul is really lovely about giving me an assist. It's pretty sad.
Well, I kind of told them up front there was no way you were getting this without help.
Jeez, you know.
Listen, I appreciate that. That's true. You're a
I'll
truth
tell you
teller,
though, man,
Dave Wilson.
was I typing fast because I had no idea, so I'm typing the lyrics as I go. What's that great app that you use for
There
Shazam?
are many of them
Shazam.
that are sort of under the radar.
Shazam.
But you know who the lead singer was on that particular song?
What?
I have to say the voice sounded vaguely familiar. Who was it?
It should. Steve Winwood. He was a teenager back then when
Those
he
guys,
was the
man,
lead singer of the Spencer Davis Group. That was the beginning of his recording career.
They were all in so many different bands.
Yeah.
Right?
Yeah, absolutely. Traffic and, of course, on his own.
Yep.
Yeah.
There you go.
I like some of his solo stuff.
Blind Faith.
Yep. In any case.
Okay, so what do you got here?
Somebody help me. That you could say that stocks might be saying that if they were inclined to do that. I mean, when you look at what's been going on the last couple of days, you can understand it. But Barry Bannister, who's the head of institutional equity strategy at Stifel, kind of took a step back. And in his view, what stocks are going to need at this point is some support from commodities, specifically oil and gold. He's looking at the relationship between Brent crude, which he sees kind of as more, indicative of what's going on than the U.S. benchmark, the WTI, that we all pay attention to. So Brent crude relative to gold as what he calls a reflation indicator. So is inflation coming back? Are companies able to raise prices? That's what, he's looking to the commodity markets to tell him. And when you go there, I mean, clearly with oil being down as much as it's been, I mean, it's just not good. This ratio between Brent and gold fell 8 weeks ago to its lowest level since the Brent futures began trading in 1988, and then dropped as much as 57% more. So you're talking about record lows. And the chart shows you, based on what Bannister put together for his latest research report, that if you go back to 2002, 2009, 2016, you see that this ratio was turning around, either as stocks were starting to come off their lows or as they were preparing to. So you put it all together, and it's like, somebody help me. A stock investor might well be saying that about now, looking at this chart. If you want to do that, folks, send me an email. I'll get it to you with the explanation that goes with it and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
David, I need to ask you, are all these ratios, do they still make sense in today's market? I feel like the market, in terms of leaders, laggards to some extent, has changed. I mean, I don't know. What do you think about this?
Well, true enough. But what's interesting, if you just focus on stocks and you look at relationships, I mean, you see that, we're kind of back to where we were in 2000 in some respects. Like the one I had the other day with the NASDAQ 100 relative to the Russell 2000, right? I mean, it shows you that we've been, where we are now, we've been there before. And, it didn't go necessarily so well back then. At the very least, it's food for thought.
Yeah. No, it's true. And it is good to make those comparisons and, the old axiom about, history doesn't repeat itself, but sometimes it rhymes, right? At least it gives you some guidepost or some parameters to try and figure out, because this time is different, even though I feel like we say that all the time about this current pandemic.
I do feel like this
the reality is that if you take a long view of history, we have dealt with some pretty traumatic things, and maybe you have to go back a little further than we're used to. But
we don't have the models, right?
Yeah,
so you've got to rely on some of these relationships. All right,
Hey,
David Wilson, well done. I'm really upset that none of you guys had faith in me.
Yeah, blind faith.
Blind faith.
Boom.
Exactly. All right, have a good weekend. Or actually, we're going to see him later on because he's got his stock of the day.
We are indeed. All right. In the meantime, we are awaiting the close of trading. We're going to drive you to the close with Kara Murphy. That's coming up in a few minutes. She's got a new gig. Eager to catch up with her. But in the meantime, why don't we check in with Bob Moon? He's got World
Sounds good to me, Jason. A surging coronavirus outbreak is sweeping the city of Gallup, New Mexico, on the outskirts of the Navajo Nation. And today, the governor invoked New Mexico's Riot Control Act as she sealed off all non-essential traffic on roads around Gallup, a city of roughly 70,000. With intensive care facilities overwhelmed, the New Mexico city is one of the country's worst current hotspots for the pandemic. While Congress contends from afar with the staggering U.S. economy, the Federal Reserve is a beehive of activity. Bloomberg's Herb Chapman reports.
The sluggishness of Congress has put the Fed on the spot, Harvard professor Dan Tarullo, a former member of the board, said in a Bloomberg interview.
It just puts them under a lot of political pressure. Pressure on the one hand to get money out the door, and on the other hand not to make any mistakes. The best thing for the Fed and the best thing for the country is that the next legislative package extend beyond July and make sure that those people who have been most affected over an extended period of time, they're going to have resources.
Tarullo pointed to forecasts that double-digit unemployment could persist into next year. In Washington, Irv Chapman, Bloomberg Radio.
The new White House press secretary, Kayleigh McEnany, held her first briefing as President Trump's chief spokeswoman today, breaking a more than year-long drought of briefings from the press secretary. McEnany was asked if she'd pledged to always tell the truth.
I will never lie to you. You have my word on that.
It's not clear if she was including passing along misinformation from the president himself. Just breaking on the Bloomberg, President Trump says the FDA has approved the Gilead drug for emergency use. Global News 24 hours a day, on air and on Quick Take by Bloomberg. I'm Bob Moon.
Elite advisory firms rely on BNY Mellon's Pershing to meet the needs of their most complex clients. Karen Novak, Chief Operating Officer at Pershing Advisor Solutions, explains how.
At BNY Mellon's Pershing, we bring customized insights and strategies to help you grow your advisory business and stay on the leading edge. We can support the needs of your most sophisticated clients with a full range of investment and wealth management solutions, from access to private banking to consolidated bank and brokerage custody. Learn why so many of the largest advisory firms turn to us for the financial strength and high-touch service that BNY Mellon's Pershing can provide. Are you well positioned to stand out from your competition?
Learn more at Pershing.com or call 800-445-4467. Brokerage custody provided by Pershing LLC and other services provided by Pershing Advisor Solutions LLC. Both members of FINRA and SIPC. Private banking and